All right, go ahead.
Hi. I was wondering if you could talk about the potential of remittances from the more developed world and having them be incorporated into financial flows to microfinance institutions. If you think it's really a powerful source of financing, what barriers you see, and if you can talk about any current deals that or partnerships that are happening in that area. Thanks.
Who'd like to start? Vikram?
Actually, for Egypt, it's not allowed for us to do transfers. However, we try to do something. Right now, we have our 46 branches that we allow for any client can use any of 46 branches to deposit his money and get it from other branch. And this actually, we have got it from Uganda. They started transfers like this. The people go to marketplace. When they get back to they get trapped or something. So they started this. They place the money in one, and they get it from the other branch. We use this right now. They can use any branch for settlement of installment, but they can do even this transaction until we are allowed. Hopefully, we can do it.
So internationally, the two, I think, best known, or at least the ones that I know of, are one is Motez in Haiti that does a lot of international remittances between the Haitian immigrant population in the U.S. and remittances back to Haiti. In addition, in India, another MFI called Spandana has recently forged a partnership with Western Union, again for international remittances. In our case, the Western Union relationship wasn't of interest to us because it's more about the market clientele that's doing the international remittances between India and, in that case, primarily the Mid East. But we are looking at domestic remittances, and the mobile device that I mentioned, inbuilt in that is a P2P transaction, which effectively is a domestic remittances. So in a large country like India, that's an even greater opportunity, we feel, than the international, although clearly there's a lot going on the international front as well.
I just want to add, for the remittances, we had a panel, I think 2 weeks ago, and so I was talking about the Motez model. Vishal doesn't know I work with Motez now. It's been a year. We didn't see each other for a year now. So it's been a year and a half that I work with Motez on the diaspora and remittances. So we do have documentation. If you're interested, I can forward to you guys the bibliography and also the presentation that we had with Appleseed.
I think you had your hand up. Oh, yeah.
Hi, so basically I have two questions for Vikram, actually, because you were the one who brought some of the points that I'm interested in up. In terms of insurance, considering disaster and particularly also mobile banking, I'm wondering in a country such as Haiti, where the land itself is already depleted, and so with hurricanes also it's very prone to disasters. In terms of mobile banking, security is not something that's there basically. And so I'm wondering how viable these options are for for a country like Haiti, and also in terms of your interest rate regulations. Subprime, we do understand that that's integral part of microfinance, but the impulse, of course, is to protect the poor, and I'm wondering why we should fight that impulse.
Okay, I'm intrigued by the last part, but I'll hold on that till the end. Okay, so on the first part, insurance. Look, I'm not an insurance expert, but clearly, anytime you're trying to do insurance for a small geography, a single country, the actuarials will tell you it doesn't work out. So for a small country or for an MFI that's working in a small region, clearly some kind of partnership with a larger set of geographically diverse MFIs is the way to go. Now in India, where we as an institution are diverse enough and the country is large enough that you can actually start making disaster insurance, the numbers work out. And we're working on a product with a couple of reinsurers in that front. But for small countries, the place to go is there's a group, for instance, called Microinsurance Agency, which recently got some funding from the Gates grant. And what they do is they club a number of different MFIs in a number of different countries, and that's the only way to go if you're in a small country, especially one that's disaster prone, like Haiti is and many other countries. So that's the first thought on that. And the reinsurers that are thinking about this are Swiss Re and Munich Re. But everybody will eventually once we get into those numbers. In terms of safety for mobile, interestingly, the sort of initial mobile banking initiative came in South Africa with a group called Wizit. And it actually was inspired by the lack of safety of cash transactions. And so what was happening is, payments from the government for entitlements were being knocked off, and the guy who would go out there was getting beat up, and theft would happen. So they used mobile devices actually to prevent that from happening. And today you've got mobile that's fairly sophisticated. You can do biometric authentication if the PIN code becomes difficult for an illiterate or a semi-literate client. You can do voice to text even in some places. Now obviously with each of these technologies the cost goes up, but if safety is a concern, this is something that one would invest in, and there are models out there. In our case, we do have a biometric application in our pilot, but we also have one that's not biometric, and we're testing both, and we think, at least in India, you can do it without the biometrics and keep the cost down. In terms of your third question about protecting the poor, no doubt we're sympathetic to the idea of protecting the poor. The question is, what's the best way to protect the poor? Is a cap on interest rates, for example, protection of the poor? I feel it's not, because I think it then rations credit and doesn't give them access to credit. On the other hand, truth in advertising, laws against abusive collection practices absolutely need to be there. And so if there is going to be regulation on protecting the poor, that's where I would like to see the emphasis, but less so on interfering with the market, which I think if there's enough competition, eventually it will work to the benefit of the poor.
If I could just add, because that also gets my attention, catches my attention. That's about the protection of the poor. I mean, I can't agree more that that by having subsidized credit or subsidized interest rates, we're actually working against the long-term viability of the institution. I was just in Vietnam recently, and they were saying, well, we have to help the poor, so we have to continue to provide subsidized money, but we don't have an endless money tree in the back that we can continue to pick from to provide the money. So it implies that there's going to always be a source of money to provide this subsidized credit, and it doesn't make a lot of sense in the long-term sustainable model. So you have to be sensitive to it, but you also, one of the myths is that poor people can't afford to pay, interest rates, whatever they are, if they're slightly higher than a bank. That's not always the case. In fact, they're oftentimes very good at paying those interest rates because they have the access to the credit that they didn't have before. So this is a motivating factor for them. It's something that gives them opportunities that we heard about before. So anyhow, I think that we have to price our products such that we always put our priority on sustainability, for long-term sustainability, so we can be that source of credit in the future.